Hey everybody, it's Bubba Hutchison, Coastal Virginia Realtor with Howard Hanna. Hope you're doing great today. This is part of my educational series on my website and on YouTube, all about what goes into buying, selling, real estate, primarily in Coastal Virginia, but this applies to all over the United States. Just because I'm located here does not mean I only service here. We have people all over the country, and most of these things you'll learn about through this series are going to apply everywhere. So hope you enjoy it. We started off last time talking about the pre-approval process because we were focused on buyers because there's so many buyers out there right now with so few houses. So the more prepared you can be in this environment, the better. So we talked about pre-approvals, how it works, and what you can expect when you deal with a lender trying to be pre-approved. So that was great. Now we're kind of just doing a natural next step in that process. And we're going to talk about what loans are out there. Because once you're pre-approved, you got to figure out, okay, well, there's several different kinds of loan products. Which one's going to fit me best? And what goes into all of them. And so Ben Munson's here again. Ben's my good friend who works for Tidewater Mortgage in Southeast Virginia. And he's going to tell us all about loans. But first, just tell us a little bit about yourself, Ben.
Yeah, well, I've been a lender with Tidewater Mortgage for 6 years now, but a lender in general for over 17. So I've got a lot of experience and yeah, I just love helping people. So I'm looking forward to this, Bubba.
Yeah, no, thanks for joining us. I know you're so knowledgeable and enthusiastic about this stuff. So I know it's going to help me learn a lot. It's going to help all these people that are watching learn a lot. And yeah, well, let's dive right into it. So we've got, you go through the pre-approval process, you're pre-approved. Now we got to figure out, okay, I'm ready to make an offer on this house. What loan are we using?
So yeah, look, there's a ton of loan types out there. And if you're working with a good loan officer, they're going to narrow it down to hopefully 2 to 3 choices for you that are going to be best. Obviously having too many options can sometimes be a bad thing. Paralysis analysis, or whatever they call it. Paralysis.
By analysis.
Here we go.
Yeah.
I'm going to share my screen though here, Bubba, and just kind of go over just a few. And I think really the main difference between all of these different types of loans and any type of loan is who is providing the mortgage insurance. And mortgage insurance is when a borrower defaults on a loan, the bank is guaranteed to get back all of their money. So it is foreclosure insurance, for lack of a better word. So with conventional loans, that insurance is provided by private companies. So that is called private mortgage insurance, or PMI. People have heard of that. When you come to FHA, USDA, and VA loans, these are government insured loans. These are government agencies that are providing the guarantee to the bank in order to make those loans.
Right. So I mean, from a buyer's perspective, it really doesn't affect them. They're just like, hey, I'll take whatever I can get. But what you're doing is coming at it from the standpoint of, just so you know how this works, these people are lending you money, and this is how they protect themselves to make sure they get paid back, even if you can't.
And mortgage insurance does matter too, because the buyer pays for it. So let me, with
some people don't even know why that is. Why am I paying PMI, as they call it? And it's because, hey, your loan in the bank's eyes needs to be protected with some kind of insurance, and that's why.
Exactly. Before PMI, their banks wouldn't loan to you unless you had 20% down. So it allows more people to purchase homes. It really does. So conventional loan, people have heard this. This is the most common type of loan that has PMI on it. And like we talked about, if you put down 20%, there is no mortgage insurance on a conventional loan.
And just real quick, I don't want to cut you off, but I'll totally forget about it later. And with regards to PMI and conventional loans, I had a client come to me and said, hey, my dad has been telling me I got to save up 20% for a down payment, and which was very smart. But he had no idea that you actually could put less than that down. And then he was told, oh my God, but then you're going to have to pay private mortgage insurance on top of your mortgage. It's just going to be junk money, and it's a waste, and it's so much, and it's going to take your whole budget out of whack. But it really differs on the people. It's in each applicant. Some people are going to use PMI. They got to have PMI, but they can get by with not putting so much down, and it actually won't be too bad. So
yep.
Absolutely. Not to go down a rabbit hole on it, but don't be scared of private mortgage.
Absolutely. And every person is different. Some people want to put money down. Some people like having cash in the bank. It just depends on how people are wired. So, there are loans to fit every different type of person, in different situations. So
Okay, well, let's go through.
absolutely. So let me move on. So FHA is Federal Housing Administration. That's a government insured loan. So this is a government program that was created to help people who had lower credit scores, higher debt to incomes, and didn't have as much money to put down. So the 3.5% is the down payment minimum with FHA loan. And that's not just for first-time home buyers. That's anybody can get an FHA loan.
I think sometimes people just assume it's for first-time home buyers because for most first-time home buyers, that's
I think
the best way to go.
Maybe. But anyway, the USDA is U.S. Department of Agriculture. This is a loan for rural areas. So you have to buy in a specific area that's considered rural, and the USDA determines that. And that allows you to put down no money, no mortgage insurance, reduced mortgage insurance, and it's just all around a great product for somebody buying in a rural area.
You can't use it in downtown Norfolk or in Richmond or in DC. It's a
rural area. So in this area around here, it would be Isle County, Surrey County, Southampton County,
areas of Gloucester
County. Absolutely. Yep. And on up Middle Peninsula, that kind of area.
Gotcha.
VA is the Veterans Administration. This is a loan for active duty and veterans. So you do have to be eligible and there is something called a certificate of eligibility that I can help a veteran or somebody with the VA loan. I can help them pull that to see how much of the VA loan they have available. But that has no down payment and no monthly mortgage insurance. All around, VA loan is probably one of the best loans out there for sure.
Yeah, and it's great. A lot of people who either serve the military or are actively in the military don't realize how much the VA wants to help. And they will do everything they can to make sure that you can make use of that VA loan. So it's a great product.
Exactly. And then the one down here, last one, is just a jumbo loan. So it's a conventional loan, but a bigger one. And there's a loan limit. And right now in 2023, it's around $725,000 in this area. Now, if you go out to LA or somewhere else that has higher housing costs, that limit goes up. So it's dependent upon the area. But jumbo loans are probably the least common of all of these loans on here.
But we'd all love to have one.
Yeah. Hey, big loan.
We'd all love to have none. But yeah, exactly. I mean, hey, I'd love to say I put $1 million down and still needed a jumbo loan to cover the rest.
Yep. Exactly.
But it just doesn't happen too often. Yeah.
Yeah. So, I mean, there's all kinds of different options out there. Now, all of these options pretty much require a down payment. But there are down payment assistance options for first-time home buyers. So I want to go over those very briefly here. And this is through Virginia Housing. Virginia Housing is a state program, and they offer several different types of loans. I'll just go over just a couple of them. The first one is the down payment assistance grant. This is a grant money that does not have to be paid back. Mm-hmm. It's 2 to 2.5% of the purchase price. And then you have to put down 1%. So you do have to put down a little bit of money with this, but you get free money.
Yeah.
You have to be a first-time home buyer, and there are income limits and purchase price limits with this and all of their programs.
Okay.
This can also be used to pay for your closing costs. If you're using a VA loan that doesn't require a down payment, you can use that 2% to pay for your closing costs, which can be anywhere from 3 to 5% of the purchase price. So that's really
great to know. Well, okay, so if you're using a loan that doesn't require a down payment like VA does, you can still use this program and put it towards your closing cost.
Exactly.
Nice.
Which is really nice. You do have to be a first-time home buyer, and obviously income limits, just like the first program there. So
okay, nice.
The next one down here is called the VHDA Plus loan. So this is down payment assistance, but instead of it being a grant, they loan you the money. So you're going to have 2 mortgage payments. You'll have one big first mortgage payment and one very small second mortgage payment for that down payment assistance loan.
Okay.
And that can be anywhere from 3 to 5%. It's a 30-year loan, no prepayment penalty. You can pay it off anytime, refinance it if you want to.
Okay.
You do have to be a first-time home buyer with that. And there are higher income limits with this program, so more people can qualify. This is probably the most common program they have.
Okay, and I guess really when you look at it, 3 to 5% on a 30-year loan, 3 to 5% of a purchase price over a 30-year span is a really low monthly payment.
Yep.
Top of your mortgage. So
exactly. So yeah, these programs are state specific, and obviously the terms can change at any time. So, make sure before you look, call Virginia Housing, speak to a lender first, and let's talk about your situation and see.
Right. And if you're watching this from outside of Virginia, this isn't going to apply, but I'm sure your state's got something very similar to it. So we can connect you with somebody who's in your state if you have some questions about it. But all this kind of stuff you don't need to try to remember today. Any great lender like Ben is going to be able to field your call, talk to you for a little bit, get you pre-approved, and then see what's available to you without you having to remember all this stuff. But it's great to know as much as you can about it, because you want to be able to, bring it up in the course of a conversation if you see something that you think could really help you out. But Ben, man, fantastic again. Thanks for all the knowledge. And I think that's given everybody a really good baseline of, hey, pre-approval, what are the loans, what might fit me? If you need any more information on this, please call Ben. What's your number?
757-869-2683. Just call or text me.
Okay, great. And you can reach me anytime at BubbaHutchison.com is my site. You can call or text me at 757-880-2945. We'll be back with another one of these very soon. So I appreciate you watching, and take care.